Hey, so we got a really important message today. We've had now 3 major bank crashes or emergency bailouts done, and the state of the real estate market is shifting dramatically. Yesterday, I was just with a woman in a training who works at bank Swiss Bank, and her bank was just taken over by UBS in the snap of a finger. She's like, in the snap of a finger, I just got 50,000 new colleagues. And we were talking about the implications on what it means for her commercial division, where they do a lot of real estate investor loans. And I'm looking around at the liquidity crisis that we're facing inside the United States of America. We're going to be diving into that in this section. It's going to be a short one, but very impactful. If you are investing in real estate right now, or you're considering investing in real estate, you'll want to listen up and pay attention to this one. It's very, very important. Okay. So quick message from our sponsor. Okay. If you are looking for help with this business, you want to like dive in deeper into it, then just type in the comments at any time the word help, and my team will reach out to you. We've got some free trainings on this stuff. We've got an event coming up. Every once in a while, we'll do 15-minute calls with people, like whatever we can do to serve you and help you. Awesome. Cool. The catch is, if you're looking for what the catch is, we do everything up front for free. But the catch is, if you come to one of our like live training events, we charge for those. If you ask our team to build out something for you, like Facebook ads and things like that, we have costs on our end. Then we obviously would give you a proposal. We would charge for that. But anytime like you're corresponding with our team just to get some of the free resources up front, we don't charge for any of the stuff like that. So that's the word from our sponsors, so to speak. Okay. So you just type the word help in the chat at any time, and my team will get you connected. Okay. Cool. So what's going on? Well, here's what's going on. The United States Fed, they're not even the United States. I shouldn't say it that. There's the Fed, the Federal Reserve. It's not even a government institution. It's privately owned. They have been obviously jacking up interest rates, and it's causing a meltdown in the market. The other thing that they've been doing is they've been pulling out liquidity. They've been pulling out money. Since 2008, not many people know this, but since 2008, what's been happening is this. It's basically like an airplane. Okay. My sketch here of this airplane might be horrendous, just FYI. Okay. But it's basically like we've had this airplane flying in the sky that looks more like a shark than an airplane. But this airplane's been flying high in the sky since 2008, and it has not landed for gas ever. It's just been flying and flying and flying. That's essentially what the monetary policy of the Fed has been since 2008, all the way up until about 9 months ago. So basically we had 12, 13, 14 years of flying this plane, never having to land for gas. That wouldn't be normal or natural, obviously, if you saw an airplane flying without ever going down and getting gas. That's what's been happening with our money supply in the Fed, in our relationship with them. We've been pumping money into the market. And then 9 months ago, they said, whoa, inflation's out of control. We got to start slowing stuff down. We got to take money out of the market. And now what you're seeing is this money being vacuumed out of the marketplace. And as that happens, what's going to happen is you're going to see more banks crying and saying, holy smokes, we are illiquid. We don't have the funds on hand right now. They have lent out too much money. And then when other customers come in to grab their money, they don't have the deposits on hand because banks are not very liquid, at least the banks that are already starting to tumble. This happened, by the way, in 2008. We saw it. We saw Lehman Brothers go down. We saw Countrywide Financial go down. We saw a whole bunch of them. And then there was a calming period of about 4, maybe 6 months, depending on which point you're measuring from, where the government stepped in and all kinds of stuff happened. But then all of a sudden, all the dominoes started to fall after you hit that 6-month cliff. And that's what's happening right now. I kind of feel like it's going to happen faster than the whole 6-month plateau. I don't want to wish doom and gloom or harm. I'm not a big Nancy naysayer. I'm actually an eternal optimist. I'm an entrepreneur, for goodness sakes. God has blessed us to build this beautiful business that we have, serving clients and helping people with their real estate investments. We've been able to build this beautiful thing because a lot of it because of God, number one, but then number two, because I'm an optimist. And I always look for the bright sunshine, the silver lining to the cloud. It doesn't matter. And I'm still looking for it right now. And I know where it is. But the thing is that this is inevitable right now. We're not going to be able to stop the economy from from going through its big recession here. And it's going to be a big one. I really, really, really feel that. So many things are playing out again. Like I rode that whole roller coaster 2008 through 2012. I was there every step of the way, buying real estate deals, dealing with banks, dealing with financing sources. Like I have personally had the blessing and privilege of being part of over 150 loans, probably much more than that at this point. But like I've been on the front lines of this stuff for a while. I understand what's happening. I'm dealing with lenders right now on current deals. At any given time, I'm negotiating different bank terms every single week, I feel like. Anyways, all that to say is that lending's tightening up. The people that took out mortgages maybe 4 or 5 years ago, that their loan is coming due right now because they're forced to refinance it. They call them adjustable rate mortgages, things like that. They're at a point now where they're not going to be able to refinance because unless they have really good liquidity and it's really cash flowing strong, but there's a strong chance that they might not be in that position. There's going to be less money available to be lent out on the street. And so real estate deals are they're going to start dropping from the sky. Really, really good opportunities. And so I encourage you, there's still deals even right now that some people, they thought they had their financing lined up a month ago, but all of a sudden their lender is backing off right now. I'm hearing about those deals left and right. I'm going to try to negotiate one of them right now so that I can buy it. Does that mean that we run, we hide, we don't do anything? No, it doesn't. That means that when the rest of the market's running away, just like Warren Buffett says, when other people are greedy, you should be fearful. But when other people are fearful, you should be greedy. And so we should wisely, smartly go into the storm right now. We should be the ones taking the right deals. We should be the ones getting the ones that cash flow, not like speculative, they'll cash flow in 3 years. I'm talking about they cash flow today and they cash flow really, really well. Those are the plays that we're making right now here at Home Invest. Those are the plays that I encourage you to make. There's plenty of them out there as long as you're looking off market and as long as you're going in a lot of times direct to the source, straight to the seller, instead of using those outdated techniques like trying to like go through brokers and things like that. Go direct to the seller right now. Much, much better outcome for you for the deals that you're going to be able to get and actually cash flow. Okay. So that's like the big report. Okay. When banks are shaking like this and liquidity is being pulled out of the market, loans get much, much tougher to get. Therefore, there's going to be more forced foreclosures essentially, or forced sales. The other thing to watch right now, office space has been fragile since COVID. And as we go into this recession even deeper, guess what happens? There's a lot more businesses that don't renew their office space. That means that the office space sector could get hit even harder during this recession. Retail tends to be the next thing that starts to slip too, like shopping malls, strip malls, etc. If people aren't going out and spending money at those shopping malls, then a lot of times then stores, they're forced to close or they won't renew their lease. And then therefore that whole sector could come down some too. So lots of stuff is happening. Like this is a very exciting and yet a little bit nerve-wracking time. I get that, but keep your optimistic hat on. Look for the silver lining. The silver lining is there's deals out there. You just got to make sure you're getting awesome cash flow deals. Okay. If you're looking for help with this, if you want to be the active hands-on buyer, then just type help in the chat, in the comments down below, HELP. My team will hook you up. Just let us know what you're looking for help with. We've got a couple killer trainings that we just put out on helping generate off-market deals. Like if you want to get sellers coming directly to you. And we've got an event coming up here in just a couple of weeks that I think would be worth you checking out if you really want to learn this stuff. It's a full head-on 3-day event. You should come check out. If we can serve you, happy to. I'm going to get ready. I've got a really important broadcast I'm doing tonight for our accredited investors, all the people that have invested in projects with us. And we're going to go deeper on it. If you want to hang out for that, then just jump back on later and we'll see you there. Okay. All right. Thanks. God bless. See you later.